Hello everybody, how are you? Hope you are all doing well. First of all, I would like to welcome to everyone for the Republic Day and as well as watching my channel. My name is Tapus Kumar Basu. On behalf of my channel, the Technical Analysis of Financial Product, today I have once again came to illustrate you technically what would be the range of Nifty for the coming 2-3 days. Now without wasting any time, let me straight away go to the daily candlestick chart of Nifty 50. What the Nifty 50 says. This is the daily candlestick chart of Nifty 50. You see the last candle. This is the last candle, and the last candle you see is a big bullish candle. Why it is to be known as a bullish candle? Already previous lot of videos I have already explained all the red candle to be termed as the bearish candle, all the green candles to be termed as the bullish candle. Why it is to be known as a bullish candle? As because the closure of this candle is higher than the opening. So that's why it is known as a bullish candle. So based on this candle, we can expect we are getting some positive indication from here. But we cannot come to a conclusion only having based on this candlestick pattern. Now let me also cross check with another indicator. First of all, you know, sir, I have in the last 2-3 videos I have already explained you the Elliott waves. How does the Elliott wave move in the market? Elliott wave generally moves in the market 5:3 ratio. First 5 ratio to be termed as a impulsive waves, and last 3 ratio to be termed as a corrective waves. Elliott waves can be moved towards upside, towards downside. Here we can see the downside Elliott wave. These are the first wave, second wave, third wave, fourth wave, fifth wave, and last 3 corrective waves. From here Elliott wave is moving towards upside. This is the upward Elliott waves. In case of upward Elliott wave, we have seen that first wave has already been completed, then the second wave has already been completed, third wave has already been completed, and the fourth wave has completed, and just it is the end point of the fourth wave. Now after this point we see there is a big bullish candle, so it means there is so we can say that the fifth wave has just started, but we cannot say the fifth wave has just started, but because we have to depend on the appearance of next day's candle. If you see the next candle, there is a bullish candle. If we see there is the very next day bullish candle is formed, then we can confirm the fifth wave has started. So based on the Elliott waves, if we see the very next day there is another bullish candle, then we can confirm that the fifth wave has already been started. And if the fifth wave starts, then we can say based on the Elliott waves there is a possibility to be retraced towards the upside. So now we have to depend for the next day's candle, then we can confirmly say that the fifth wave has already been started. But here we are getting little indication there is a possibility to be forming the fifth wave, but still we have to wait for the next day's candle. So as far as the Elliott waves is concerned, we cannot come to a conclusion right now, right? So apart from the Elliott waves, let us check with the another indicator which we call the Fibonacci retracement. Already I have plotted over here the Fibonacci retracement zone. You see the right now Nifty is trading above the 38.2% of Fibonacci retracement. Now what is the value of 38.2% of Fibonacci retracement zone? That is 17,250. So it means the Nifty is trading above the 17,250 because the Nifty has closed 17,277.95. As long as Nifty will trade above this particular 38.2% Fibonacci retracement zone, then there is a possibility to be retraced towards the upside. Not only that, Nifty has to close above this level, then we can say there is a possibility to be retraced toward upside, and on that case the resistance would be around 17,500, which is the 50% of Fibonacci retracement zone, and the next level would be 17,800. But if the Nifty is unable to close above this level, instead of not only that, but if Nifty breaches downside, on that case we can say the very strong support would be 16,950. It means if the Nifty has to move towards the next level, that is 17,500, Nifty must trade above this level, 38.2% of Fibonacci retracement, that is 17,250. Not only that, Nifty should close above this level, then we can say that there is a possibility to be retraced towards the upside. On that case, resistance would be 17,500. The next resistance would be 17,800, and very strong support is 16,950. This is as far as the Fibonacci retracement zone is concerned. Now let me cross check with another oscillator also. I'd like to say there is another very important oscillator which we call stochastic oscillator. Stochastic is a very popular indicator. A lot of traders are using the stochastics. stochastic, there are generally we can see two lines of the stochastic. This is stochastic line and this is a dotted line. So that here you can see the stochastic line has already intersected the dotted line from below, which you technically call the bullish crossover, right? And not only that, it has not only crossed the dotted line from below, but it also crossed the 20, which is known as a more bullish. So as far as the stochastic is concerned, the momentum is bullish. So as far as stochastic part is concerned, momentum is bullish. As far as the relatives is concerned, we have to wait for the another candle. If we see there is another big candle, then we can confirm this is the fifth wave. So market should move towards the upside. On that case, resistance will be 17,500. And as far as the Fibonacci retracement zone is concerned, if Nifty is able to Nifty manages to close above this level, or Nifty is able to trade above this level, then we can expect the very next level is resistance, possibility to retrace toward the upside. On that case, resistance will be this one. So these are the particular condition. If these are the condition fulfilled, then there is a possibility to be retraced towards the upside. On that case, what would be the resistance, what is the support? I clearly mentioned over here, right? So first resistance will be 17,500, second is the 17,800, next support is the 16,950. Support is this. Now let us check the volatility also. Already I have plotted over here Bollinger Band. Bollinger Band, generally we can see three lines of the Bollinger Band. This is the middle band, this is the upper band, and this is the lower band, right? These are 20 simple moving average, and this is the upper band of this is standard deviation of 20 simple moving average of upper band. This is standard deviation of 20 simple moving average lower band. So what is, as far as Bollinger Band is concerned, if you see among the there is a huge expansion among the bands, then which generally signifies the huge volatility. You see among the bands there is a huge gap. So that's why it generally signifies the huge volatility. So we can say that there is a huge volatility is there. But with comparison to the other side, if I come to the particular this juncture, you will see the expansion is very low. So that's why here is a little volatility. So as far as the volatility is concerned, still there is a high volatility, right? Now, apart from it also, let us go to the option data. What the option data says, because from the option data we can get more information about the Nifty's activity. See, this is the option data. But now what is the PCR? PCR is the put call ratio, right? Here is the PCR is 0.7143. 1 is the neutral zone, above 1 is the bullish, below 1 is a negative. So as far as the PCR is concerned, Nifty seems to be negative. Now if we come to the particular this strike rate, 17,200, where put writing is 31,42,300, whereas call writing is 29,63,500. So put writing is more and call writing is with comparison to the put writing, call writing is lower. So here is the put writing is more. So we can say this is the one of the good support area. And here if I come to the particular this area, here is also 17,000 strike rate. You see the put writing is 54,96,550. This is actually open interest, right? More open interest is here. More open interest. What is that comparison to the call is a lower open interest. So here is the put writing is more than the call writing, and here is also put writing is more than the call writing. So we can say 17,200 is a strong support, and the very next support is 17,000. So support would be 17,200 to 17,000. And if I come to the particular this strike rate, that there is a 17,500 where more call writing is happening. You see, there is a particular this what is the open interest of call? 72,64,800, and over the same strike rate the open interest of put is 22,55,050. So more call writing is happening. So this would be the resistance level. So what is the range of, based on the Nifty option data, we can say the Nifty's range within this week would be 17,500 to 17,000, right? So but the data is data is not positive, data is a negative. So right, so now let me once again go to the chart. So I have already explained you technically what is the resistance level, what is the support level. I also explained you the condition. If particular this condition is going to fulfill, then there is a possibility to be reduced to the upside. If and otherwise it may come down. So based on the technical parameters, I told you if the market moves towards the upside, the first resistance will be 17,500, the next resistance will be 17,800, and if it moves towards downside, then the strong support area for is 16,950. This is as far as the technical parameters are concerned. Now you know that technical parameters I explained technical. Now fundamental thing, you all know what is happening in the US. In the 30 years, the first time US has got huge amount of inflation. So now people are very much worried about, and now maybe to control the that inflation rate, Fed may announce that interest rate high. If the interest rate Fed announces the interest, if the Fed implements the interest rate in the USA, then we can see more correction in the Nasdaq and Dow Jones. If we see that there is a more correction is going to happen in Nasdaq and Dow Jones, on that case definitely it may impact in the Indian equity negatively. Then we can expect some bit of downside correction. This is as far as the fundamental matter. But as far as the technical matter also, I told you this. So this is more about the Nifty 50. And to be very honestly I'm telling you, this channel is purely for education purpose and learning purpose. And this channel doesn't suggest for any kinds of stock tips, stock advisory, or this channel doesn't responsible for any kinds of trading activity. If anybody would like to do any kinds of trading, request you to please do consult with your own respective investment advisor. After that, you take your own decision. And apart from it also, I am having on my Telegram channel also. That channel is also for educational and learning purpose. So in description box I have given the link. If anybody interested to join my Telegram channel, also can join my Telegram channel. And also I request everyone, please do subscribe this channel and to share this channel to a near and dear ones, because the more responses will definitely encourage me to bring a lot more videos in coming futures. Apart from it also, I'd like to tell you one thing. Please watch my very next video where I'm going to explain you about the Bank Nifty. I mean, what will be the range of resistance and what is the range of support in the coming 2-3 days. So request you to please watch my very next video where I'm going to explain you about the Bank Nifty. By saying this, I'm going to sign off today's program. Thank you very much and have a great day.